Welcome to our channel, Tesla Changed My Life. Today, we're diving into the fascinating world of Bitcoin halving. Have you ever thought about what Bitcoin halving means and how it could potentially affect Bitcoin's price? This significant event in the cryptocurrency landscape occurs roughly every 4 years, or to be more precise, after every 210,000 blocks have been mined. Now you might be asking, what is the real implication of this halving? Let's simplify it. Bitcoin mining refers to the process of solving intricate mathematical problems to validate transactions and include them in the Bitcoin blockchain. For their efforts, miners are compensated with Bitcoin known as the block reward. Each Bitcoin halving event cuts this block reward in half. Think of it as a pie. Initially, miners received an entire pie, but after the first halving, they only got half a pie, and after the second halving, a quarter. Do you see the trend here? The pieces keep shrinking. The result is a slower creation of new Bitcoins. As of the present day, the 18th of January 2024, the block reward is at 6.25 Bitcoins. However, this will not remain the same for long. The Bitcoin halving clock predicts that the next halving will take place in roughly 103 days on the 22nd of April 2024. As the clock strikes zero, the block reward will drop to 3.125 Bitcoins per block. Bitcoin halving is an essential occurrence for anyone involved with Bitcoin, including miners, investors, and even casual observers. It changes Bitcoin's supply and demand dynamics, which could possibly impact its price and the overall market sentiment. So that's a brief overview of Bitcoin halving, but how does this event affect Bitcoin's price? Let's explore further. Now you might be wondering, how does this halving of block rewards affect the price of Bitcoin? Well, it's all about supply and demand dynamics. So let's start with the basics. Bitcoin is a decentralized digital currency, and just like gold or any other precious commodity, it has a limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity is a fundamental part of Bitcoin's design, and it's why many people see it as digital gold. But unlike gold, which is mined at a relatively steady rate, the rate at which new Bitcoins are created decreases over time. This happens through an event called the Bitcoin halving, which slashes the block reward, the number of new Bitcoins created and earned by miners, by half approximately every 4 years. Now let's talk about the demand side of the equation. Bitcoin has been growing in popularity since its inception, and with more people and businesses accepting it as a form of payment, the demand for Bitcoin is expected to remain strong. So what happens when the supply of something decreases, but the demand remains constant or even increases? You've guessed it. The price tends to go up. And this is the crux of why Bitcoin's price could potentially increase following a halving event. But it's important to note that this isn't a guaranteed outcome. A myriad of factors can influence Bitcoin's price, including market sentiment, regulatory news, technological advancements, and macroeconomic trends. The halving is just one piece of the puzzle. However, it's also worth noting that historical data suggests a positive correlation between halving events and price increases. After the first two halvings in 2012 and 2016, Bitcoin's price saw significant upticks in the months that followed. But remember, past performance is not indicative of future results, so while the halving reduces the rate at which new Bitcoins are created, it doesn't necessarily mean the number of Bitcoins available to buy on exchanges will decrease immediately. Miners might decide to sell their Bitcoins right after the halving, or they might choose to hold on to them, anticipating a price increase. In conclusion, the Bitcoin halving is a unique mechanism that sets Bitcoin apart from traditional fiat currencies. By systematically reducing the supply of new coins, it creates a scarcity that can drive up the price if demand stays strong. But like any market, it's subject to various factors and uncertainties, so it's always crucial to do your own research and consider your risk tolerance before investing. That's how Bitcoin halving can potentially lead to a price increase. But what does the Bitcoin halving clock tell us about the next halving? The Bitcoin halving clock, a handy tool for cryptocurrency enthusiasts, gives us an estimate of when the next halving will occur. So what's this Bitcoin halving clock all about? Well, it's a countdown timer, a beacon in the crypto world that keeps us attuned to the ticking rhythm of Bitcoin's heartbeat. It estimates the time remaining until the next Bitcoin halving event, an event that occurs approximately every 4 years, or after every 210,000 blocks are mined. Now, you might be wondering, what exactly is this halving we're talking about? In essence, the halving is a momentous event in the life of Bitcoin. It's when the block reward given to miners is cut in half, slowing down the rate at which new Bitcoins are created. This halving process is designed to continue until we reach the year 2140, at which point the total supply of Bitcoins will have hit its maximum limit of 21 million. So where does the Bitcoin halving clock come into play? As of today, January 18th, 2024, the Bitcoin halving clock estimates that the next halving event will take place in about 103 days. Yes, you heard that right, a little over 3 months from now, on April 22nd, 2024. At that time, the block reward will be reduced from 6.25 Bitcoins to 3.125 Bitcoins per block. Now, why does this matter? Bitcoin halving is a significant event for the cryptocurrency community. It influences the supply and demand dynamics of Bitcoin, and as a result, it could potentially have a profound impact on Bitcoin's price and the overall market sentiment. The Bitcoin halving clock serves as our compass in this vast ocean of cryptocurrency, guiding us through the ebbs and flows of Bitcoin's life cycle. It helps us anticipate and prepare for the potential market changes that each halving event could bring. Now that we know when the next halving will occur, let's look at how previous halvings have influenced Bitcoin's price. History often gives us a hint about the future, so let's rewind and examine the impact of past Bitcoin halvings on its price. Our journey begins in 2009 when the first block of Bitcoin was mined, setting the block reward at 50 Bitcoins. Fast forward to 2012, the year of the first Bitcoin halving. This event saw the block reward reduced to 25 Bitcoins. What happened to the price? Well, it skyrocketed from around $13 to a whopping $265 within a 6-month period post-halving. Then came the second halving in 2016. The block reward halved again, this time to 12.5 Bitcoins. The price response, even more dramatic. Bitcoin started the year at around $430, but by the end of the following year, it had reached a staggering near $20,000. That's an increase of over 4,000%. Fast forward to the third halving in 2020, the reward dropped to 6.25 Bitcoins, and we saw Bitcoin's price rise from around $8,500 at the beginning of the year to approximately $29,000 by year end. So, what's the pattern here? Each halving has consistently led to a significant price increase within the following 1 to 2 years. This phenomenon can be partially explained by the basic economic principle of supply and demand. As the supply of new Bitcoins entering the market decreases due to the halving, the demand for Bitcoin, assuming it remains constant or increases, creates upward pressure on the price. However, it's important to remember that correlation does not always imply causation. While it's tempting to attribute these price increases solely to the halving, we must keep in mind that numerous other factors like growing mainstream acceptance, technological advancements, regulatory changes, and macroeconomic trends also play a significant role in shaping Bitcoin's price trajectory. It's also worth noting that the percentage increase in price following each halving appears to be decreasing. While the price increase was explosive following the first and second halvings, it was less dramatic after the third one. This could be due to the maturing of the Bitcoin market and the diminishing influence of the halving on supply as the total number of Bitcoins approaches its 21 million limit. That's a brief look at the past, but what can we expect from the upcoming Bitcoin halving? Predicting the future is never easy, but based on past trends and current market conditions, we can make some educated guesses about the next Bitcoin halving. Let's start by looking at the historical trend. The previous Bitcoin halvings in 2012, 2016, and 2020 all led to significant price increases in the months that followed. The underlying theory is simple. If the supply of Bitcoin reduces and the demand remains constant or increases, the price is likely to go up. However, it's important to note that past performance is not a guarantee of future results. The world of cryptocurrencies is incredibly volatile, and a multitude of factors can influence the price of Bitcoin. Global economic conditions, regulatory changes, technological advancements, and market sentiment all play a part. As for the upcoming halving in April 2024, The block reward will decrease from 6.25 Bitcoin to 3.125 Bitcoin. This reduction in new Bitcoin entering circulation could create a supply shortage. If demand continues to increase, as we've seen in recent years, this could potentially drive the price upward. There's also the psychological aspect to consider. The halving is a significant event in the cryptocurrency community. It generates a lot of buzz and attention, which can lead to increased buying activity. This hype and speculation can also contribute to a rise in the price of Bitcoin. However, it's also important to consider the uncertainties. For instance, how will the wider economic landscape look in April? Will the regulatory environment for cryptocurrencies become more stringent? What technological developments could impact the overall demand for Bitcoin? These are all questions that can significantly affect the outcome. We also have to consider the miners. The halving will effectively cut their income in half unless the price of Bitcoin increases to compensate. This could potentially lead to some miners exiting the market, which could have implications for the network's security and transaction speed. In conclusion, while there is potential for a price increase following the next Bitcoin halving, it's not a guarantee. The world of cryptocurrencies is complex and unpredictable. It's a high-risk, high-reward market, and it's important to do your own research and understand the risks involved before making any investment decisions. While it's exciting to speculate about the future, it's also crucial to remember that investing in cryptocurrencies involves risk. No one can predict exactly what will happen, and any investment should be made with an understanding of the potential for loss as well as gain. Always remember, the future is unknown and the only certainty is uncertainty. So we've covered quite a bit today about Bitcoin halving. We've journeyed through the concept of Bitcoin halving, a unique event that occurs approximately every 4 years or after every 210,000 blocks are mined. This event is significant because it reduces the block reward given to miners by half, effectively slowing the rate at which new Bitcoins are created. This process is expected to continue until around the year 2140, when the total supply of Bitcoins reaches its maximum limit of 21 million. As we stand today, on January 18th, 2024, we have about 103 days left until the next Bitcoin halving event, estimated to take place on April 22nd, 2024. At this point, the block reward will be reduced from 6.25 Bitcoins to 3.125 Bitcoins per block. We also delved into the potential impact of Bitcoin halving on Bitcoin's price. This event is of great importance to the cryptocurrency community as it influences the supply and demand dynamics of Bitcoin, potentially affecting its price and overall market sentiment. We took a look back at past Bitcoin halvings and their impact on price, providing us with historical perspectives to better understand what might happen in the future. We also dared to venture into the realm of predictions for the next halving, though we must always remember that these are just predictions and not guarantees. Remember, while Bitcoin halving can lead to exciting opportunities, it's important to do your own research and consider your risk tolerance before making any investment decisions. Until next time, keep exploring the fascinating world of Bitcoin. That's all for today's deep dive into Bitcoin halving. We appreciate you taking the time to watch and learn with us. We hope you found this video insightful and that it gave you a clearer understanding of this important event in the Bitcoin universe. But our journey doesn't end here. We have a lot more exciting content planned for you. If you found this video helpful and want to keep up with the latest developments in the world of Bitcoin and other cryptocurrencies, please consider subscribing to our channel. Your support helps us continue to create high-quality, informative content like this. And don't forget to hit that notification bell so you never miss an update from us. Also, if you have any questions or suggestions for future video topics, feel free to leave them in the comments section below. We love hearing from you and value your feedback. Please don't forget to hit that subscribe button and stay tuned for more exciting content. Until next time, keep exploring.